Europe's manufacturing production declines for the 19th consecutive month. JP Morgan reports election volatility 10 to 30% higher than 2016 and 2020. And OPEC Plus extends 2.2 million barrels per day oil cuts until December 2024. You're watching Qnews and this is the Economic Bulletin. I'm Henny Saif. We'll present comprehensive coverage and expert insights on key updates regarding pivotal economic trends and financial shifts. Welcome back. We start off with Europe, where the manufacturing production declined for the 19th consecutive month in October, though there are tentative signs of easing recession, as indicated by the Purchasing Managers' Index. The index rose slightly to 46 points in October from 45 in September, remaining below the 50 mark that signals growth. Manufacturing has faced challenges for 2 years due to waning exports, reduced demand and supply chain issues. Moreover, a survey has shown that investor morale in the Eurozone improved for the second consecutive month in November. The Sentex index increased to negative 12.8 from negative 13.8 in October, though it fell slightly short of the expected negative 12.5. The survey of 1,066 investors conducted from October 31st to November 2nd showed expectations stagnating at negative 3.8 points. The current situation score improved to negative 21.5 from negative 23.3 last month. In Germany, Europe's largest economy, investor sentiment also rose to negative 29.8 from negative 31.5. However, the report cautioned that while investors are not shocked by the ongoing crisis, there are no signs of a positive turnaround. British Prime Minister Keir Starmer has announced at the Interpol General Assembly an additional 75 million sterlings to strengthen border security, bringing total funding for the UK's Border Security Command to 150 million sterling pounds.
So we're giving our new Border Security Command an additional 75 million pounds of new funding on top of the 75 million pounds we've already committed. This will support a new organised immigration crime intelligence unit, hundreds of new investigators and intelligence officers, backed by state-of-the-art technology. We're also investing a further £58 million in our National Crime Agency, including strengthening its data analysis and intelligence capabilities. And we'll also legislate to give those fighting these gangs enhanced powers too.
On another note, British Treasury Minister Tulip Siddiq has warned that 60% of Brexit economic impact is yet to hit the UK, citing forecasts from the Office for Budget Responsibility. That projects the UK economy shrinking by 4% in the long term. Imports and exports are also expected to end up 15% lower than they would have been within the EU. The OBR analysis shows that only 40% of Brexit's impact has been felt so far, a revelation that critics say highlights the need for closer European Union ties. The UK recently paid 23.8 billion sterling to the EU in post-Brexit obligations. On Europe-China tariffs, China has asked France to press the European Commission for a balanced resolution on tariffs imposed on Chinese electric vehicles. In a meeting with French Trade Minister Sophie Primas, Chinese Commerce Minister Wang Wentao said that the EU investigation is hampering auto industry ties between China and the EU. Primas affirmed that the EU will not yield on core issues, despite its wish to avoid escalation. The dispute has led China to impose anti-dumping duties on European products and launch investigations into other imports. Wang asserted that these moves comply with WTO rules, in contrast with the EU's rash EV probe, while expressing willingness to work towards a proper solution. The Standing Committee of China's National People's Congress will convene later today, with analysts anticipating endorsement of major spending initiatives to boost the economy. With the U.S. election approaching, lawmakers are expected to approve a fiscal package worth trillions of yuan, aimed at alleviating pressure on local governments and recapitalizing state lenders. While economists from Goldman Sachs and others predict at least 1 trillion yuan in special sovereign bonds to replenish bank capital, detailed plans to support consumption may take months to materialize. In India, a business survey showed that the manufacturing sector rebounded in October after 3 months of decline, driven by a significant increase in demand, which also spurred job creation and improved business sentiment. The HSBC final India Manufacturing Purchasing Managers Index rose to 57.5 in October, up from an 8-month low of 56.5 in September, and surpassing the preliminary estimate of 57.4. The output and new orders sub-indices hit 3-month highs, reflecting the surge in demand. And moving on to the United States, JP Morgan estimates a 60 to 70% chance of Donald Trump winning, contributing to heightened fluctuations in G10 currencies, which have reached new highs in the lead-up to the election. Current election volatility is reported to be 10 to 30% higher than during the elections in 2016 and 2020. In terms of potential US dollars reactions, JP Morgan suggests that a complete Republican victory or a red sweep would lead to a 5% increase in the dollar's value. According to JP Morgan, if Trump wins with a split Congress, a modest rise of 1.5 to 2% is anticipated. Conversely, if Kamala Harris wins with a divided Congress, the dollar is expected to weaken. JP Morgan notes that the current market positioning is unlikely to prevent the dollar from rising and may even support it if Harris wins. In the MENA region, a Saudi Finance Ministry statement shows that the country recorded a budget deficit of 30 billion riyals in the third quarter, as lower oil prices weighed on revenue. Saudi Arabia's total spending came to 339 billion riyals in the quarter, as it continued to spend heavily on its Vision 2030 transformation program, aimed at diversifying the economy away from the oil sector. Total revenue, meanwhile, stood at 309 billion rials in the third quarter, with oil revenue at 191 billion and non-oil revenues at 118 billion rials. According to a report released by Morocco's Higher Planning Commission, the country's unemployment rate rose to 13.6% in the third quarter of this year, up from 13.5% a year earlier, as the farming sector continues to lose jobs due to drought. As of September, there were 1.63 million unemployed individuals in the country. The unemployment rate was notably higher among young people, reaching 39.5%. For graduates, the rate stood at 19.8% and 20.8% among women. Official data has shown that Turkey's annual inflation rate decreased less than expected to 48.6% in October, as officials seek to curb rising consumer prices. Inflation had dropped to 49.4% in September, which was also below expectations. The Central Bank of Turkey began raising interest rates last year to combat rising prices. In September, the central bank kept the main interest rate unchanged at 50% for the sixth consecutive month. As for the energy sector, the United Arab Emirates energy company ADNOC has announced an initiative to implement highly autonomous magnetic artificial intelligence in the energy sector in partnership with G42, Microsoft and AIQ. This follows a $1.5 billion worth of investment from Microsoft into G42. The UAE aims to diversify its economy beyond oil. Emirati's Minister of Industry and Advanced Technology, Sultan Al Jaber, announced that new AI technology will autonomously analyze large data sets, reducing seismic survey times from months to just days, and improving production forecasting accuracy by up to 90%. He made these remarks at the opening of the Abu Dhabi International Petroleum Exhibition and Conference that kicked off today. According to Russia's TASS news agency, pipeline gas exports from Russia to Europe have risen by over 15% in the first 10 months of 2024. Gas exports reached 26.52 billion cubic meters, up from about 28.15 billion cubic meters last year. Exports to Western and Central Europe via Ukraine totaled 12.85 billion cubic meters, a 7% year-on-year increase. Chinese refiners are anticipated to decrease fuel production for the remainder of the year and maintain lower operating rates into the first quarter of 2025, despite a seasonal increase in demand. Consultancy Restart Energy has revised its forecast for China's refining throughout to 14.7 million barrels per day for the fourth quarter, down from 15 million barrels per day previously. This is driven by weak profit margins and low fuel consumption in road transport. This marks the sixth consecutive month of year-on-year declines in refining output, with September data showing continued struggles due to lower domestic fuel sales and government-imposed export quotas. OPEC Plus has agreed to extend its oil production cuts of 2.2 million barrels per day until the end of December 2024. The group reiterated its commitment to achieving full compliance with production targets and compensating for any overproduction by September 2025. Saudi Arabia and allied producers have postponed plans to gradually increase output, extending existing cuts for an additional month. No specific reason was provided for this decision, which coincides with the upcoming U.S. presidential election. Previously, OPEC had announced that the voluntary cuts would be gradually reduced starting in September 2025, but the latest extension keeps them in place until the year's end.
The economy is doing well, and that's why we have in our outlook or in our projections, we have the global economy at 2.93%. I think the IMF, World Bank at 3.1%, which is in line with historical traditional numbers. We are very positive on demand. As I said, both in the short term and in the longer term, we see demand in 2050 reaching 120 million barrels per day.
India's Oil Minister Hardeep Singh Puri has urged oil producers and consumers to engage in discussions to stabilize prices following a more than 2% rise in oil prices after OPEC Plus postponed output increases by a month. As the world's third largest oil consumer, India relies on imports for over 80% of its oil needs. Puri emphasized that there's no oil shortage, with new producers entering the market and existing ones increasing output. He advocated for a collaborative approach to determine realistic pricing and highlighted the impact of technological advancements like green hydrogen on future oil demand. Puri anticipates that India will increasingly source oil from the Gulf as global economic dynamics shift.
I think everybody is well served that the current levels of fossil fuel must be.
8 OPEC Plus member nations, including Saudi Arabia, the UAE, Kuwait, and Oman, have announced an extension for their voluntary oil production cuts until the end of December 2024. This move aims to support global oil prices, which have recently ranged from $73 to $85 per barrel due to fluctuating geopolitical and economic factors. Analysts suggest the extension could push prices higher as global supply tightens, particularly with oil producers seeking an average price around $95 per barrel. This comes on top of mandatory cuts of 3.6 million barrels per day that OPEC Plus members have upheld since late 2022, highlighting their strategy to balance supply with demand as they aim to stabilize revenue amidst unpredictable market conditions. Saudi Arabia's current output, now under 10 million barrels per day, reflects the group's broader efforts to sustain prices and address recent price volatility. The impact on consumers could be felt in fuel and heating costs, especially if prices rise further. Some observers link this timing with U.S. election pressures, though OPEC has not confirmed specific motivations behind the extension.
And joining us today is Mr. Amir Shubeki, the economist and specialist in oil and energy affairs, to discuss the recent energy sector developments after OPEC Plus' recent decision to extend production cuts. Mr. Shubeki, thank you for joining us. Now, what are the primary reasons behind OPEC's decision to extend the production cuts? Is it primarily driven by concerns about global demand or geopolitical factors, or are there other considerations?
Thank you. I think, yes, there are many considerations, in fact, in the markets, the most important of which is the uncertainty in global demand and, in fact, as well, the what's available right now of the surplus of oil, which led OPEC to cut the voluntary production, which was in fact projected in the economic package in China. And in fact, it doesn't seem that it really has affected the Chinese economy significantly. And as well, we have a presidential election still pending, and we are still waiting to see what is going to unfold on the global economic demand. And so I believe that this was a very crucial step for the OPEC.
Well, speaking of the presidential elections, how will the U.S. presidential election and potential changes in the U.S. energy policy impact OPEC Plus's decision and the global oil market, especially that it might have an effect, the results of the election might have an effect on the value of the U.S. dollar?
Yes, in fact, right now we are talking about, now we are having a world that is watching closely the results of the presidential elections of the United States. It's not just the United States that is waiting for these results. In fact, global markets are ardently waiting to see the results of the US presidential elections. In fact, whether Kamala or Donald Trump wins, in fact, a lot of disparities are going to occur. In fact, there is a huge disparity between the two policies of these two potential presidents. And in fact, the American economic policy is going to change radically, which is going to reflect heavily on oil markets specifically, and as well when it comes to energy sector. In fact, Trump kept on saying one word: drinking and drinking and drinking. In fact, he was speaking about producing surpluses of oil in the United States and specifically in Alaska, because a lot of projects were suspended, and Trump is in fact planning to reopen and re-inaugurate these projects. Like drilling locations and all these projects Trump is planning to revitalize again. And as well, Trump might even lead the United States to withdraw from the conferences of parties, the future conferences of parties on climate change. And this definitely will lead the United States to shed its commitments towards carbon emission reductions. And so if Trump wins, we're going to see a lot of oil production and less oil prices. So definitely this is something we're going to perceive.
Then, Mr. Shubeki, what are the potential implications of this decision for the energy security of various countries, especially those who are heavily reliant on oil imports?
The states, a bigger role for the states means a bigger role for oil companies and American oil companies. We have Brazil, Guyana, and Latin America, and other countries that in fact are going to suffer from this. In fact, a lot of countries are going to suffer from this as well. Russia, its revenues might get affected negatively if oil prices decreased. And so there are a lot of interconnections here happening, and a lot of changes, economic changes that are going to be carried out on a global scale if Trump rose to power.
Mr. Amir Shubeki, the economist and specialist in oil and energy affairs, thank you very much, sir, for joining us. Oil prices rose more than 2% following a decision by OPEC Plus to delay plans to increase output, while markets brace for the U.S. presidential election. Brent futures were up by 2.3% to $74.81 a barrel. The U.S. West Texas Intermediate crude was up by 2.6% to $71.30. In global markets, world shares were mostly higher as markets reacted to China's leaders beginning a meeting to yield new support for the economy, while investors also closely watched the results of the upcoming U.S. elections. In the United States, the S&P 500 rose by 0.1%, while the Dow Jones Industrial Average fell 0.3% and the Nasdaq Composite was up 0.1% higher. In European markets, Germany's DAX slipped 0.1%, while the CAC 40 in Paris edged 0.1% lower, and Britain's FTSE 100 traded 0.3% higher. In Asia, Hong Kong's Hang Seng gained 0.3%, the Shanghai Composite Index picked up at 1.2%, the Kospi in Seoul jumped 1.8%, while markets in Tokyo were closed for a holiday. That's all we have for now, but here's a roundup of today's key stories. Europe's manufacturing production declines for the 19th consecutive month. JP Morgan reports election volatility 10 to 30% higher than in 2016 and 2020. And OPEC Plus extends 2.2 million barrels per day of oil cuts until December 2024. That's all for today's economic news bulletin here on Qnews, but please stay connected for more news and updates. I'm Henny Saif. Thank you for joining us.